Hi everyone, welcome to our analysis from business model perspective of Meta's quarterly report Q2 23. Check out our disclaimers. All right, so we start with the financials, and the big news was total revenue was up 11%, and that's what gave the share price the big boost during and after the call. And a few other points that we'll cover throughout. Let's first look at the results very briefly and then go to the business model. Advertising still the by far largest source of revenue, 98.4%. Then there is other, which includes things like developer payments or processing payments on developer tools. Very marginal, and to be honest, maybe one day it's not going to be there. Things like the games, who knows? So a majority of the revenue made by the apps. And here's the Reality Labs, which is the metaverse and the VR headsets, etc. We'll cover that in the third part of this presentation. So expenses, they had been under a lot of pressure from shareholders because expenses as a part of revenue had gone up quite a lot. So they're basically presenting that they're on a good trajectory. And one of the biggest things was obviously the layoffs, on which they've given an update. I'll cover that just in 1 second. So first part is now, or second part after the financials, is the supply side coverage, which that is basically the users and influencers and not paying business, non-ad paying businesses are key partners from a business model perspective because they are supplying the ad spaces, which then are taken up by the advertisers. That's how the business model works. As we all know, value propositions are made to both sides, to the key partners. So basically, we all use Facebook and all the other tools for free, but we pay by creating content. And that's not to mention, that's when you value our own time at $0. That's up to anyone to decide that for themselves. Key updates, and here in blue, italics are literally in their own words from the webcast. Mark Zuckerberg and Susan Lee, the CFO, were the main guys there. So basically, Mark pointed out billions of dollars we've spent on AI infrastructure are clearly paying off across our ranking and recommendation systems. So what we're hearing across quite a number of businesses is AI investment into the discovery system. And then, well, basically we can go to channels, Facebook feed and Reels. That is, as they say, part of the discovery engine, and Reels plays exceed 200 billion per day across Facebook and Instagram. Pretty impressive number, obviously. And from a value proposition perspective, one of the key things that they said is that the AI engine helps to find things that you have not found otherwise, because as you can see, I've put it into the revenue section, AI recommended content from accounts you don't follow is now the fastest growing category of content on Facebook feed. And since introducing these recommendations, they have driven 7% increase in overall time spent on the platform. So that's pretty important because, as we know, time on the platform translates to ad spaces and ad spaces translate to revenue. That's how the business model works. There's some intricacies because this is, as we've mentioned, just the supply side, but we'll come to the demand side in a moment as well. So here they say Reels monetization annual revenue run rate across our apps now exceeding 10 billion, up from 3 billion last year. And yeah, I just skipped that part. Cost savings, cost structure. Main part were discussion point were the layoffs. I think it was about 13%, but what they're saying is that the departments are hiring people with other skill sets, and that pertains to AI engineers. As with all other major tech platforms, AI is the current buzzword after it helps to boost Microsoft's share price in 2 quarters ago in their presentation of their AI engine. Everybody's now has to keyword stuff the word AI into their webcast transcripts because all of those are analyzed by AI as well and drive the share price a bit further up or not. As for the CapEx pipeline, they said they're working through what the right level of CapEx is for AI. So there's interesting updates, but let's get into what is more interesting from a business model perspective. So here just called out the things that we had on the previous page, but here in the middle, is something that we've been showing for years what it is about. Network effects and platform design can really help to improve the monetization. So let's assume your number of participants go up in a linear fashion, which for Facebook of the recent years is a pretty good assumption. Then the whole point of network effects, stoking network effects, and doing so by platform design, such as recommendation and ranking algorithms, is to drive usage metrics and therefore revenue metrics up faster than the number of participants grows. And on that one, so as mentioned, previously you used to see only stuff from people you follow plus ads, but now the AI engine is displaying things from you don't ordinarily follow, and that's been a very fast or fastest growing category in content on Facebook feed. 7% time spent on the platform, but more importantly, it's also incremental engagement. So it's not replacing other engagement, i.e., it's not replacing the time you spend on other content, in which case it will be a nil-sum game. So it says incremental, but then there's a little bit more to that. They believe that this can further continue. So the thing is, we have basically seen, based on these statements, number of participants grows linear. They say usage metrics grow faster than linear, but now are the revenue metrics growing also faster than linear? And that's then the next point. They had already pointed out a few quarters in a row that Reels, which is one of the fastest growing surface, as they call it, among their apps, is not monetizing as well as, let's say, the Facebook feed and Facebook stories, and same with Instagram. So they were pointing that out for quite a while, and they were pointing out that one of their key goals is to close that gap in monetization. Interesting from that point again is that Reels drives incremental engagement. So it's not replacing time spent on Facebook feeds or Facebook stories. It is driving incremental engagement. So it is driving incremental usage metrics. Very important, because we really, when we analyze these kind of things, we really need to look at the wording. Otherwise, we'll just think, oh yeah, fantastic. People are watching 200 billion Reels um, videos. Fantastic. But we need to look at the details. And the next level of detail is, does that drive revenue? And as mentioned, they've been calling out that Reels monetizes at a lower rate than stories and feed. And they believe that this will continue. They have been pretty open about this for a while, I think like close to a year, if not more. But Reels will stay for strategic reasons. It's been their main competitor to TikTok. If they were to dismiss Reels on grounds of less revenue generation, then they would lose users to TikTok. So, and then that's going to be a negative flywheel effect. So it will stay, and they will make sure to work on getting that better monetized. And we'll be saying a few more words on that in a few moments, because this then has to go to the demand side. All of this, I have to say, ties back to what we've covered in our premium products. Long before Reels even existed, we had been using Facebook Stories as an example, and we'd been calling out that if you develop new features, what we call digital properties, what they call surfaces, or call it main features if you wish, you need to measure the relative performance compared to other stuff that you could occupy that screen space at that time. So you need to look at opportunity cost, and you need to compare on a number of dimensions. These are some of them. So I find it absolutely fascinating. You can find our premium products on our store, but we're not here for that right now. So as mentioned, the active users are growing in a fairly linear fashion, because I mean, Facebook, let's be honest, is a pretty mature company by now and product. It's not brand new. Family monthly active people, that the family refers to their family of apps. So WhatsApp, Facebook, Instagram, and Messenger, and now Threads. They gave a few updates on Threads, but I'm not the competing product to Twitter, or shall we say X. Not going to say anything about that, because they said they were quite pleased, but then a day later they said, well, they actually also have a lot of problems with retention. That's just too new to say anything meaningful. The main thing that stuck out in my mind was Mark Zuckerberg's update, or updates to say, well, we're going to follow the playbook that we know very well by now. So, and that's I think a very strong statement where the competition should really be a little bit worried about. So here is one of the core principles of how the business model works. Users create content. There's huge network effects, single-sided and double-sided, or direct and indirect network effects among them. And that leads to engagement. Engagement can be measured in many different ways, including time spent on the app per day, per session, number of sessions per month, and so on. So that's engagement. Engagement, i.e. scrolling down, leads to ad spaces. So the more people scroll down, roughly every third of these feeds, stories or feeds updates is an ad. So the more people scroll, the more ad spaces get created, and ad spaces translate to revenue. But there's the auctioning mechanism in between. So yeah, people can scroll and scroll, and that scrolling can increase. That means the supply of ad spaces increases, but because it's being auctioned among the advertisers, it doesn't mean that it has to grow in a commensurate fashion. So what we're saying is, based on everything that we've looked at so far, ad spaces have been increasing, but the next question is demand also increasing commensurately? And that's the next part that we're going to look at, demand side on the ad spaces that get created. And that goes obviously to the business side. So here, just a few statements. We've got these also in the business model canvas that'll come up in a second, but just very, very clear call out. The answer is no to our question, whether or not the demand is increasing commensurately. So impressions have increased at 34%, but average price has decreased by 16%. And that can happen if supply outpaces demand. And the other point on that one was that the demand side has grown in impression ads. So this is the CPM ads, cost per mil impressions, and not necessarily in cost per click or cost per conversion, which are much higher monetizing ad types. And the other factor is lower monetizing surfaces. So as mentioned, surfaces are things like Facebook feeds or Instagram feed, and stories and reels. And reels is one of the ones that just monetizes less. And here their main update, and again, it does tie back into what they've been saying for a while now. Now the update is that 3/4 of their advertisers are now also using reels to advertise within that. They say, however, they do continue to expect that Reels will monetize at a lower rate than stories and feed because people scroll more slowly through video content. And the other thing that I can imagine is that it's not quite that easy to advertise on a number of products within what is shown on Reels. Reels really is a lots of dancing stuff and singing and creative stuff. I don't know how well you can advertise banking products or certain products in that kind of context. But that's fine. They're saying it's growing, and let's take it at face value. No need to question that too much. So that's the main update here on the customer side. And in yellow, basically what we've been talking about, ad impressions have grown significantly, but the monetization, the price per ad has decreased by 16%, driven by lower types of advertising, as well as growth in lower paying regions of the world, as well as lower monetizing surfaces. So that's the three factors that have led to the decline on the demand side, on the monetization decline on the demand side. In blue, then there are things that what they want to do to further increase the demand. So what are they doing for their customers, for their advertisers? Again, AI plays a role here. AI algorithms will help them to basically deliver on this value proposition, which is conversion is the rates of conversion grow. And they said conversions are growing and the growth is remaining strong. Again, there was no quantitative update on that one, but they are obliged to at least stick to the truth in some way or form. And as one example that the AI algorithms power and improve was their Advantage Plus product for advertisers, and within that, the Advantage Plus shopping product, which is a kind of a product that helps advertisers on placing ads along the customer journey. So if Meta knows a customer is interested in a certain type of product, then the advertiser's product can be displayed along that journey of the buyer, and also with things like abandoned carts as well. They just like a follow ad. So, and these things are powered by the AI algorithms. That was clearly pointed out as one of the use cases for their AI on the business side of things. The other big one, where every time you have the analysts scratching their head when they comment on these results, is, oh, why is WhatsApp not monetizing that well? Well, Facebook once again has been continuing to provide updates on that, which they have been doing for quite a while. And the update this time around was that the click to WhatsApp ads revenue is growing still very high at 80% year on year, and that the app now has 200 million monthly users. Pretty significant number. And the new thing this time around was that now advertisers can use these type of ads without having a Facebook account, which then is lowering the entry barriers. And I think anyone who has ever used Facebook advertising accounts, it's not that straightforward. So this is a pretty good update. And they did mention that there are quite a number of, in particular, smaller businesses that will benefit from this. So those were their main updates on the demand side. So on the businesses side, or on the side of the businesses that take ads or that may take ads. And that's how they want to close the gap between the supply side, the supply of ad spaces, and the demand, which then will lead to um, growth of revenue. So these are just more details on what I've just said to you. And let's have a look. This is by geography, but we're just looking at the top lines. So quarter two 2 years ago was 28.5 billion, and that had decreased, which had led to a precipitous fall in the share price for a while. It was recovering then from about 6 months ago, 6 to 9 months ago. And yeah, the 11% revenue growth was beating the analyst estimates, which is why the share price has gone up quite a bit. Third aspect, metaverse and reality labs and all that, it does remain a pretty big debacle, to be honest, from a financial perspective. Very sad for us innovators, but from the perspective of investors, it's kind of really a bugbear. If you just look here, just here is like already 15 billion and more spent in the last 4 quarters. This is the operating loss, the kind of not even the bottom line, that is the operating, the growth loss on the Reality Labs. Reality Labs is everything that has to do with the metaverse and their VR headsets, etc. Look at that. This is what would have been their result without the without the Reality Labs, and this is what it is with. And that's a pretty staggering loss. So Mark Zuckerberg had to face a number of questions from analysts during the web conference, and yeah, at least on one occasion, he really had to pause a few seconds before he could answer. That was quite interesting. Who's normally he's very, very eloquent. Yeah, Reality Labs, the main update there was their Quest 3 VR headset coming up soon. Very exciting. Hopefully it'll lead to some good results. And let's just summarize key topics where word counts by word count is not the best way to count it, but it is really being used by analysts. Word count is being analyzed by the AI systems of investment firms to pick up on trends. And if you don't stuff your webcast with certain words, then that's not so great for your share price, at least in the short term. So 49 instances of AI, and you need to look a little bit more in detail. So a number of them went on the discovery engine, so ranking and recommendation algorithms, which was on the supply side. that we talked about. Then on the demand side, as I mentioned, there's been a number of things that they have mentioned that AI powers, but remember what we said is the Meta Advantage Plus product that is being powered by AI. And the third, which I've actually skipped, is Llama, their open AI, which they have been collaborating with Microsoft, but also with the open innovation community. So the code is open, and Mark Zuckerberg mentioned several times that he sees a number of benefits in doing so, in particular with security and safety of the code, and just with general ideas that could bring about. Now, let's be clear: the AI is not all the same AI. I'm fairly certain, without knowing with that, but I'm fairly certain that the discovery AI is very different from the open code Llama AI. This is more than likely proprietary AI algorithms, and so are these ones. And there was one statement of Susan Lee that very clearly said that they are consolidating their AI models to be able to roll the learnings out across a number of surfaces at the same time. Very interesting. And Quest and Threads also had a number of mentions. So that was the main things. As mentioned, a lot of what we have covered here, we've already covered in our premium products in a lot more detail. You can check out our store. And don't forget, we're not an investment. We're not giving you investment advice. This is just purely of an educational nature. And I hope you've enjoyed it. Thank you very much.